Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the market is doing okay. Of course, it's the PSU banking space where the bulk of the rally is. The real estate pack is doing well as well. And then, of course, you also have individual names, especially the likes of Trent, etc., which are reacting to its numbers. And that solid up move there, almost a 20% gain on Trent, and it's the biggest single session gain that we have seen in a long time. So definitely deserves mention. The profitability has jumped up by 140% year on year, and the revenue too has seen a big jump up. So that's the kind of reaction that we are seeing on Trent. You also have other names like Delta Corp in focus. That stock is higher by 8 to 9%. IEX on the other hand is coming under pressure on account of that pilot of the coupling getting started. So that stock is seeing a bit of a drubbing. And then you have names like Canfin Homes, Canara Bank, even other names like an EIA, Zaggle. These are some of the reactions coming in. So a lot of buzzing stocks in terms of individual names, and at the index level as well. At least we are holding on to gains, and there's not that slip from highs that we have been witnessing in earlier sessions.
Yeah, although we're not quite latching on to the opening highs either, so we have definitely flattened out, dipped into the red, and then saw a bit of a pickup. Let's hope that we actually close in at the session highs. But this idea, this Canara Bank, this Chambal Fertilizers, SBI is your top mover on the index. Britannia, after its numbers as well, has made a solid comeback. And today, much unlike what we saw the last couple of trading sessions, IT's actually taken a step back. Call it the cognizant rub-off or what you may. L&T is not participating in today's move. HDFC Bank is actually down 0.7%. It's quiet for ICICI Bank, drifting into the red. But SBI is pulling its magic. Axis Bank is holding up 1.6%, and Maruti too is back in the green, unlike yesterday. That stock holding up 1% as we speak, and Reliance as well. That too is up 1%. But let's address the star performer today, and that's got to be all out Trent, a 17% surge, no less. Let me take it across to Vinny and get in more details of the quarter gone by. Vinny?
So absolutely a stellar performance in terms of the stock move that we're seeing post the earnings were reported. This is the single biggest intraday gain that we've seen coming in for the stock since Jan 2017. So yes, after a very long time, we are seeing such a sharp up move coming in for the stock. Now, when you look at the numbers, revenue surely an uptick of around 50%. Profits of the company more than doubling of what we're seeing in terms of the profit at 371 crores. Margins a 400 basis point expansion in terms of margins, and this is despite the focus being on the Zudio portfolio, which is the value portfolio, right? It's value pricing that they see over there. So despite that, margins have still managed to see an expansion over there. The company has managed to add 5 stores, West Side stores and 50 Zudio stores during the quarter as well. And they continue to be focusing on this trend because they're seeing good traction coming in for West Side as well as Zudio is what they are highlighting. Even when you're looking at their fashion concept business, that's also registered a like-for-like growth of 10%. Emerging categories too are seeing very good growth, whether you see a beauty, personal care segment, innerwear, footwear, that is also seeing a very good growth. The Star business is also seeing an operating revenue growth of 26%, and that has continued to see improved customer traction from the growing sales as well is what they are highlighting. Outlook continues to be on delivering consistent value to the customers. So yes, the focus has always been on Zudio. Zudio has been outperforming and doing quite well for the company. They continue to expand and deepen their presence, and obviously Star is going to be a growth engine for the company is what they are highlighting. Do not forget, on a 4-year CAGR basis, the company has seen a 40% revenue growth in terms of EBITDA. They've seen a 38% revenue growth, which is in line, EBITDA growth, which is in line with the revenue growth as well. So yes, a very, very strong performance is what they're seeing even on a 4-year CAGR basis. And that is why we're seeing the stock is also buzzing away in trade, the single biggest intraday gain since 2017.
Hold that thought, Winnie. We'll come back to you and discuss Nestle as well. But in the meantime, let me quickly take it across to Kunal to get a sense and a chart check on Trent. Did you see this move coming?
Absolutely not. I was in fact actually with a bearish view. My targets were closer to 2,900 for Trent. It moved very close to the targets, but then a complete reversal. So completely unanticipated, a move from the stock. Now I think traders would probably want to just wait out for the prices to cool off and get into a bit of a stable range. I believe now currently 3,600 looks to be a possible breakout for Trent, and on the upside it could even probably look for 3,750 mark over the very near term. So would hold on to that a view now to remain on the sidelines, and just missed out the targets by 50 points.
Okay, that's Trent in trade for you, sky high. But Vinny, after Britannia's performance, what's been Nestle's scorecard?
So Nestle's numbers also, when you're looking at it, it's an inline set of numbers that has actually come in from the company this time around. And when you look at it in terms of the revenue, yes, we were expecting a good growth of around 9% and it came in at 8%, so always in line with what the street was expecting as well. Margins of the company and expansion on that front as well. And overall, the profits have seen a 4% growth on a year-on-year basis. So do not forget that the food and beverage segment overall in the FMCG pack has been doing better. So when you look at a Britannia, when you look at a Nestle, they have more in terms of food beverage categories, and that is why their performance has been much better than other FMCG peers. When you compare it, their growth is much stronger than the peers as well. And in terms of Nestle's growth also, in terms of volume growth, seems like around a 3-4% mark. This is an inferred number that has come in, but seems like that's the volume growth that we were seeing for the company as well. Other than that, what the highlight is that out of home consumption trend has been quite strong for them. The e-commerce segment and that channel has been doing quite well for Nestle. Coffee prices, they're keeping an eye out on that because that's continue to be a bit volatile. But other than that, their key categories and key brands have been doing quite well. Strong growth continues in those brands. So all in all, an inline set of numbers is what we could say came in from Nestle.
Point taken, inline set of numbers from Nestle. Thanks, Vinny, for joining us with that. But let's keep it with earnings. Let's welcome on board Mr. Prashant Tripathi. He's, of course, the Managing Director and CEO at Max Life Insurance, joining us on the show. Prashant, hi, good to be speaking with you. Well, I was going through some brokerage notes and they suggested that the VNB growth remained weak this quarter. It was down around 18% year on year. The margins as well were on the lower side, down 1200 basis point. Is this purely an impact of the high base, or there has been a bit of a slowdown and change in product mix?
So let me first talk about the good news. The AP growth is very good, 23%, highest perhaps amongst the top 10 players in the industry. For the quarter, we grew our new sales about 18%, which is double of the private industry average growth. Our number of policies are growing 20%. So overall, there is a huge sales momentum, significantly higher than the industry. Last year, margin for the company in quarter 3 was 39%, and we have been repeating that kind of margin is unsustainable, predominantly because we had launched a new non-par design, and non-par last year were selling a lot. This year, since the beginning of the year, I've been saying that our margins will be in the range of about closer to 26-27%. And I'm very happy that we are in that range. Actually, for the quarter, we closed 27.2%. So your answer to your question is predominantly base effect, predominantly, in the good space, and I think we will finish the year very strong.
Okay, finish the year and hopefully strong at that. But how many non-par and annuity products you are planning to launch as well, because they come in with a better margin? And in terms of the strategy, what are you implementing to counter the fall that we have seen recently in the VNB at least?
VNB, again, repeating the same thing. VNB or margin is expected in the range of 27. That's where we used to be in FY22. FY23 was a bit higher because of certain things, higher mix of non-par, and we intentionally are balancing the mix of non-par in our business. If you look at the margin driver products, actually we are doing very well. If you look at protection and health segment, we grew upwards of 80% actually for the quarter and over 64% for the year. Our annuities are growing 52%, and in the quarter we are launching one annuity plan which just got launched. We are going to come up with another non-par design which is going to come in the month of March, and we are coming the suite of riders, and riders are growing quite well, about 70% year on year. So we have high margin driver product designs, and because of that, March, January, February, March is the largest quarter. We will be able to drive business. The industry numbers just came out for your benefit. In the month of January also, Max Life Insurance is the fastest growing life insurance company.
Just to clarify that point, you said margins will be in 26 to 27 range or 27 to 28?
Between 26.5 to 27 nearabouts. I mean, that's my expectation. Let's see how the quarter goes.
I understand that, and I appreciate nobody can foresee that number exactly. But I also wanted to get a sense with respect to the investment that was expected from Axis. You've got the IRDA AI approval now. In how much time do you expect that to fructify now in terms of the flows coming in? And what would be the next stage? Is there any other corporate restructuring lined up?
That's a very good question. As you know, we have been on the journey for Axis Bank's stake to increase in our company, and we followed a stepwise process. First, they went on to 13, and now we have sought approval for them to go to 19.02. That approval was awaited, and I'm very thankful to the regulator for the approval. It's subject to CCI approval. We are in the process of seeking the CCI approval, and we got 90 days. So I'm anticipating that over 90 days, this deal should be concluded. The objective will be for the first for the bank to go up to 20%, and then we will explore all options to look at further corporate events in terms of creating a listed entity, and that's what we will attempt after the overall Axis Bank investment in Max Life is completed.
And if I can quickly get a word from you on the banca channel, because that was a bit slow and muted, at least that is what some of the analysts are pointing out. When do you expect a pickup there?
So banca channel has been slow in the industry. You would notice, it's not just for Max Life Insurance. It's already come back up in the month of January. You will see our banca numbers to grow close to 30%, and I'm hoping that that momentum will be maintained. As you know, banks have their own challenge in terms of liquidity, and hence, there has been a focus to build the liabilities at the bank level. As things ease out for them, I'm sure banks will do well. As far as we are concerned, Axis Bank is a large partner for us, and our partnership is 13-year-old, and year on year they have done very robust growth. So I'm sure in some time that growth trajectory will be back for us.
And on that note, we let you go. Appreciate you making time and speaking with us. So that's the management talking about the launches that they've lined up, the fact that the entire industry growth was a bit muted, but they've managed to outperform, and they're expecting margins to be between 26.5% to 27% thereabouts. So that's the latest commentary coming in. Time now to head into a very small break. Don't go anywhere.
All right, you're watching Closing Trades, and Gujarat Fluoro, that company is in focus right now. The numbers have just come out, will come up on your screen. There's a very sharp improvement on a sequential basis. And also, of course, the presentation which they've given out, we'll talk about that. Dr. Bir Kapoor is joining us now. So, Dr. Kapoor, afternoon, thank you so much for your time. First of all, let's get over with the numbers front. Not only your company, the first 2 quarters are under pressure, and you had indicated that H2 onwards things will start improving. If I were to look at your number on a QOQ basis, is this improvement is what you were alluding to a few months back, and do you think from here on sequential improvement will continue in rest of H2?
Yes, absolutely. I mean, this is in line with our expectation. We had said that the Q2 was almost the bottom, and we would see turnaround. And we are seeing some green shoots right now. And as we had indicated that in next few quarters, we will come back to our normal numbers. And we are already seeing a sign of that, and we are very confident that we'll come back to our normal, driven by a huge, return in our fluorochemicals, fluoropolymers business.
Assume that, would that also mean that your margins will also start gravitating back towards 30% kind of odd levels, which you have spoken about?
Absolutely. Because if you see our numbers, numbers in fluoropolymers has been lower compared to what it used to be. So, and that's a performance product. And as we see a recovery in these numbers, we would see a margins going up. We are already at 21%, and I'm sure we'll go back to our earlier numbers of 30% or 30 plus margin numbers.
Dr. Kapoor, what the talk on the street, of course, is the fact that you've commenced your EV business funding. Tell us all about this. How did this come by? And does this happen in Gujarat Fluoro, or is it a spin-off of your wholly owned subsidiary?
This is our wholly owned subsidiary, which is GFCL EV. And we are really excited to announce the commencement of our battery chemical complex at commercial scale. And this complex includes electrolyte salt, which is LiPF6, which is integrated along with LIF, AHF, and electrolyte facilities, which are co-located at our Jolwa site. And this is the first step towards our foray into battery materials. And we have already said that we have invested right now close to 650 crores in this, and expecting to close close to 800 crores by the end of this financial year. And we have also given a plan because this is an exciting area for us. And this is a momentous occasion. when we embark on a new massive growth journey in EV. And this is in a space which has a very, very high potential. This is a high growth area due to energy transition to EV and ESS. Our investment plan, we had indicated almost 6,000 crores in next 5 years, with 3,200 approximately next 3 years, with asset turnover of 2 and EBITDA margin expectations of close to 25%. So we are really excited because this is an area which we are really we are in a very sweet spot, because we have been in the area of performance products, and this combined with our expertise in fluorine chemistry, AHF handling, fits right into the space where we are in. So we are really excited, and it's a very long multi-decade opportunities, and we believe that we are investing in it at the right time,
Right.
And at the right scale.
Right,
to
Mr.
garner
Kapoor, I was just
significant-
going through your presentation which you've given out after the results, and one particular slide caught my attention. You say that GFCL EV will tap significant global opportunities presented by the ecosystem over next decades. I understand this complex that you're building is obviously the opportunity is 10, 20 year plus. What kind of global opportunities are you indicating towards? Are you in talks with some global companies for supplies? Because you have done significant capex already, so there must be visibility of sales also, right? Talk to us about what global opportunities are you talking about here?
See, if you know, right now, there is already a overall trend. The EV already is big, and ESS in global scale, which is in US, EU. And outside China, there's a significant opportunity, and lately, due to changes in the regulatory environment, there is a thrust toward finding China plus one, and we fit right into that. And opportunity, if we look at it and talk about it, the global market is going to be almost 100 billion plus in 5 years, which is, I'm excluding China. In the target TAM that we are looking at the 40% of the value of LFP battery, which we had indicated in our presentation. So it's a significant opportunity that we are looking at. And we already have expertise. Currently, if you know, in fluoropolymer segments, we are already present globally, and almost 80% of our market and the volumes are coming from across the globe, whether it's US, EU, or Japan. So we want to leverage on our experience and expertise and go global in this area again.
Point taken, but I also wanted to get a sense from you regarding this EV business. When will the bulk of the revenue start flowing in? Will it happen in FY25 itself? Will it be a while later? Or is it started trickling in already? And you'd also indicated the possibility of a demerger at some point of time. Is that imminent as well over the next 3 to 6 months?
What we are looking at is we expect the revenue to trickle in by the second half of this year, most likely third and fourth quarter, because these performance materials requires validation, and these validations only happen from a commercial plant, not from a lab or a pilot plant. So that's why setting up at the commercial plant is really imminent and required.
FY25 will be when...
Yes, please.
Yeah, so just before we let you go, one quick question. FY25 will be when your EV contribution will be meaningful, or 26 will be the full year, first full year of meaningful EV contribution?
I would say FY26 would be the first full year when we'll start seeing it, because this year we are setting up the commercial plant and have the products which is fits into the the requirements of OEMs. And one part that I missed that you had asked earlier regarding, we are already in touch with all the global OEMs and the battery manufacturer for markets, for getting the product validated. Coming back to the question of demerger, certainly it's a 100% subsidiary, and we would like to look at the funding opportunities. There's a lot of potential in this company because of the business plan. So we would look at the Right now, it has all been funded through internal accruals, but going forward, we are looking at it funding through various options, including raising debt or capital through private equity. And this being in a green space has a lot of potential to raise equity.
We will keep tracking that, and as and when you raise that equity, we will be speaking with you. Thanks so much for making time and speak with us, Mr. Kapoor. But on that note, we'll take a quick breather on the show. Don't go anywhere. When we come back, we'll track the last 30 minutes of the trading session.
Back with closing trades right here on ET Now. We're holding our OK, still holding on to that 22K mark, at least for the Nifty futures, or actually no, I stand corrected. We've dipped off from there. And once again, drifting and skirting around the red territory for the Nifty spot as well. 21,929 is where we're currently at. While SBI, Hindalco, Britannia, HDFC Life are all supporting the index right now. L&T, the entire technology pack, HDFC Bank, Reliance Industries, and of course ICICI Bank as well, they all continue to ebb off as we speak right now. Sudeep Bandyopadhyay too joins in on the show right now. Sudeep, it's kind of magical, right? The way Trent delivers quarter after quarter, and the way the stock, even though it's just so stretched in terms of valuations, continues to hit sixers. Now, as I see it, it's up 18%.
Absolutely right, Aisha. I think, they have been doing a lot of things right. The Zudio diversification, which they carried out, I think has paid handsome dividends. So to be present in all segments, not only in the upper or upper middle class segment, but to go down and take the fast fashion to the lowest level, I think is a commendable job they are doing. And I think that is getting reflected in the numbers which are beating all estimates quarter on quarter. But having said that, I think the valuation at which level it is, I think is really a little scary, honestly. FY25, 90 times, I think, I will be very, very scared to touch it. It's a great company, they're doing a great job, but I don't know at this valuation whether one should buy or not. Honestly, I can't comment, and I can't, with my conscience clear, can't recommend anybody to buy this.
That is a question in everybody's mind, valuation versus performance at Trent. But we'll talk about interest rate sensitive, and especially now that MPC policy meet outcome is scheduled tomorrow. My colleague Gaurav is here. Gaurav, tell us what are the economists, most of them whom you've polled, talking about tomorrow? What to watch out for?
Yeah. Yes. So when we talk about MPC meeting, the last meeting of this FY24 is going to get concluded on 8th February. And as far as the consensus are concerned, they are expecting rates to remain unchanged. Now, if you look at interest rate trajectory, they have remained unchanged for the 5th consecutive meeting when it happened last on December 2023. And with this meeting also, if consensus are expecting the rate to remain unchanged, this will be the 6th consecutive meeting when the rates will be unchanged from RBI. As far as the BAS data is concerned, let's also look at the last 2 decades data. Now, there are some reports which states that RBI's maximum pause before taking any kind of rate cuts was 11 months before. So now when this rate cut is going to, now when the rate cut is not going to happen in this meeting as well, we may see this pause to get the pause to get more than 11 months from RBI from this from the last quarter. Let's also talk about the stance, because now RBI may maintain their stance of withdrawal of accommodations, but we may see some kind of softening coming up, and if any commentary coming up on the stance changing from withdrawal of accommodation to neutral stance, it will be really positive for the market. Let's also look at some macro indicators. When we look at GST data, it was strong at 1.7 lakh crores, and it was also the second highest GST collection for the year in a particular month. When we look at the manufacturing PMI data, it was also strong at 56.5 versus what it was as 54.9 in the month of December. Services PMI has also remained strong at 61.8%. So that means that there are no concerns going on in terms of growth, but any commentary coming up from the RBI to keep this growth uptick will be a very positive commentary from RBI to come from. Let's also look at the commentary which will be for the over tightening, because when the rates are unchanged at 6.5%, we may see some kind of risk coming up because of the over tightening. So any commentary on that note? And lastly, RBI is expected to keep the liquidity support for the banks through VRR. So that is why any commentary coming up on that front will also be important from RBI. RBI is also expecting CPI rates to remain above 5%. They were at 5%, above 5% in the last trend also, and they are expecting these rates to come down to 4%. And that is why any commentary on the inflation rate will be also key watchable from RBI in this quarter and in this meeting.
We're going to have an esteemed panel analyze the governor's commentary as well. Nilesh Shah from Kotak KMC. We'll have Abhik Barua, the chief economist at HDFC Bank. Siddharth Sanyal from Bandhan Bank. A.K. Tiwari, MD at SBI. And Tanvi Gupta Jain as well from UBS Securities, all in tow. I think the Prime Minister is speaking currently in Parliament. We can cut across to that.
मेरी तो मुसीबत ऐसी थी कि यहाँ किसी मिनिस्टर से मुझे अपॉइंटमेंट नहीं मिलती थी। वो कहते थे भाई आप जानते हो मेरी तो दोस्ती है, मैं फोन पे बात कर लूंगा, लेकिन कहीं फोटो वोटो निकल गए, ये डर रहता था। यहाँ मंत्रियों का डर ऐसा था। अब खैर उनकी मुसीबतें मैं समझ सकता हूँ। मेरे यहाँ एक बार बहुत प्राकृतिक आपदा आई। मैंने उस समय प्रधानमंत्री जी को बड़ा रिक्वेस्ट किया कि आप आइए, एक बार जरा देख लीजिए। उनका कार्यक्रम बना, फिर साहब एक एडवाइजरी कमेटी बनी थी ना, शायद वहां से हुक्म आया तो कोई हेलीकॉप्टर से हवाई निरीक्षण करे वो तो मैं समझ सकता हूँ। साहब वो कार्यक्रम बदल करके साउथ में किस राज्य में गए तो मुझे याद नहीं रहा आज, और बोले हम हवाई जहाज से ऊपर से देख लेंगे, हम गुजरात में नहीं आएंगे। मैं सूरत पहुंचा हुआ था, वो आने वाले थे। मैं जानता हूँ आखिर में क्या हुआ होगा। तो आप कल्पना कर सकते हैं साहब, प्राकृतिक आपदा में भी मैंने ऐसी मुसीबतों को झेला है, लेकिन उसके
Well, I think the Prime Minister has now moved on and, talking about yesteryears. But I think the key point that he was making was the fact that he acknowledges the kind of growth that PSUs have seen of late, and as to how this is a hidden gem which has now been discovered, and how PSUs have been an investor favorite as well now. Clearly re-emphasizing what he's been saying of late from the last time in Parliament, I think about a year back, Ajay, when he spoke about PSUs.
6 months back.
6 months back,
yeah. He was actually, in a way, taking a kind of a dig at opposition, and did talk about how the performance of PSUs have been increasing, and kind of nudged the stock market guys that look at PSUs, and then there was a 6 months of massive rally. And indeed, I mean, why to take away, credit when it's due, that there is a sharp improvement in the performance of most of the PSUs across the sectors. The only question mark is the valuation in some cases. But we have Sudeep with us. Sudeep, there's a PSU pack, oil and gas, which is relatively undervalued compared to other. Surely it has gone higher than its own averages now. But then people say that though so much of capex is happening in energy. Engineers India, would you bet on that one? Because that particular company is an advisor on most of the PSU capex.
No, absolutely. I think some of these PSU companies are really doing well, particularly the companies which are on the advisory side or on the construction side. They are getting loads of orders, and obviously these orders will get executed over a period of time, and they will earn their revenue. We have to be just a little careful that receiving order doesn't translate into revenue in the immediate future. It may take some time before the revenue flows in. So that's one point. The other point, as far as specifically for Engineers India is concerned, yes, absolutely, this company is in a very good position with all this activity going on in the public sector undertakings, construction, infrastructure, railway related infrastructure, and a whole lot of other things, including in the area of defense. So Engineers India has a role to play in many of these projects, and they are getting consultancy and implementation advisory in a lot of these contracts. And obviously the company is on a good wicket. So yes, it can be looked at, and of course the valuation has moved up quite a bit. But a company like Engineers India, if somebody is in for long term, I think one can look at even at current level in spite of the rally.
So that's the latest coming in on some of those stocks. But before I move forward, I wanted to quickly get Nuresh also into the conversation. We haven't been able to get his view on the markets as yet. Nuresh, what do you make of the market mood right now? Because there's a bit of a slip from the highest point. We have completely flattened out. But it's SBI, which is one stock that has managed to hold on to good gains.
So the view remains same. We are seeing better action across the broader markets because the leadership is missing. If you look at it, you have HDFC Bank down and you have SBI up. The weights are very different for both these names. Similarly, ICICI Bank has also taken a little bit of it. So till the time we don't see HDFC, ICICI, Kotak or any of the other weights make a move, we will be stuck in this range of say 21,700 on the downside, 22,100, 200 on the upside. But the bias on the broader side is much better. We are looking at pharma names breaking out. You have many other stock-specific names on the mid-cap, small-cap side doing well. So as of now, time to be stock-specific and focus more on the broader markets.
There, Indian Overseas Bank up 20%, Yes Bank 17% higher, UCO Bank 14% higher, Central Bank doing quite well for itself. From the PSU banking space, barring of course Yes Bank, which I mentioned, which are the stocks that you like? Nuresh, the question is for you.
I would be actually looking at avoiding all these PSU names, PSU banking names. For example, right now, if you look at Indian Overseas Bank, it has a higher market cap than PNB, Canada, as well as a Bank of Baroda. And it just has a 2% public holding. So time to book profits out of all the PSU banks, focus only on SBI. That's the one which has made a new high. And it has been an underperformer compared to the small, mid and all names of PSU banking space. So from here at 660, 670, the best play in the PSU pack looks to be SBI.
Well, as you can see on your screens, it's time to get ready for a power-packed lineup at the 8th Global Business Summit, which is due to take place in New Delhi from February 9th to 10th. More than 2,000 delegates representing diverse industries and sectors from across 20 countries are set to attend the biggest business conclave in the national capital. And that's not all. The Prime Minister is also going to be preparing to set a vision for a Viksit Bharat, disruption, development and diversification at the center of it all. So don't forget to catch an all-round coverage only on ET Now.
All right. In fact, Nuresh was mentioning it's the broader markets which are actually making big moves. Landmark Cars, after results, actually had gone sideways. Today, the stock is coming back. The news is that they have launched a new showroom here in Mumbai at 8:55. How do you look at the charts, Nuresh?
Which stock?
Landmark Cars. Exactly
Yeah,
where you bought your last Mercedes from.
I would love to do that, but I don't know how to drive, so that's another thing.
Well, okay.
So Landmark Cars, the chart is interesting. We've seen say a price volume tick today post some announcement. But technically, if you look at it for the last almost 4 months, it has been around this 850 mark only. And once it sustains 880, that's a short-term breakout if it can close above that. On the lower end, 780 to 760 is the zone where one can look to accumulate in any case of a bad reaction post numbers. So overall, 880 or closer to 780 is where you want to buy.
Most Maybachs are in any case chauffeur-driven.
Chauffeur-driven.
I've never seen anyone owning a
See, I'll
Maybach.
ask Sudeep. No, he's got one. Sudeep, do you drive your own car? The Merc which you have?
The Maybach.
Not really. I used to drive once upon a time. Now I have a driver. I must confess.
What about your Merc, Ajay?
Well, it's still in my dreams right now.
Good one. You saved yourself.
Yeah. So actually, but there is something which is a bit worrisome about Landmark. Recently, Mercedes-Benz, I mean, I'm sure Nisha knows about it, they have changed their strategy. Till some time back, they used to give 8% to the dealer. Now they're giving 2% to the dealers, making a case that I mean, our products don't need so much of push on marketing, and whatever demand is there, we are showcasing the product by experience centers.
Yes.
Yeah.
Yeah, that's what they said, that they are cutting down on the dealerships a bit and directly going to the consumers
The
because
billing
they
happens
don't
at the
need
dealer.
it. And even the online system has
Yeah,
become too
online,
strong for
online,
them because
yeah.
people know what they want to buy, right? So they do the
like
test
that,
drives, etc.
They drive their
but they
friends
just
and all
buy
of
it
their
there.
cars.
Correct.
So probably that's why Landmark is now going towards non-Mercedes, MG and all of this MG, M&M and all of that.
Sure, diversifying their revenue pool as well. That's a smart strategy to have. But let's see whether Tata Consumers has had its strategy in place or not, because they made that big acquisition with respect to Capital Foods. Not sure if it will show up in this number itself, but let's go across to Winnie to get a sense as to what the expectations from the quarterly earnings are. Winnie?
So in terms of Tata Consumers numbers for the December quarter, what we are expecting is a revenue growth of 8%. Margins expected to see an expansion of around 100 basis points. While in terms of the profits of the company, that's also expected to see a growth of 16%. So strong double-digit growth expected in the food business of the company. Nourishco, Soulful, that's expected to continue to see a strong growth. Margins expansion is expected. Obviously, we'll keep an eye out on it in terms of commentary, how they're seeing in terms of the raw material pricing shaping up, as well as international business. In terms of the tea side, that's expected to be a bit muted this time when you compare it. And US coffee is also maybe expected to see a bit of a decline. So let's keep an eye out on that side in terms of the international business. But commentary is going to be key in terms of the latest acquisition that they have. So in terms of that, how is that performing? What is it that in terms of synergies that we'll be seeing coming in from the company, and any update on acquisitions is key to watch out for. Overall margins, what they are expecting, as well as market share in tea is a key factor to watch out for from Tata Consumers.
Okay, that's what to expect from Tata Consumer. But Britannia, that also came out with its numbers, although the stock did begin its recovery move since last week itself, and today as well, it's holding out well. Let's hear out what the management had to say in their conference call.
I do think that as we go forward, Mihir, it's going to be important for us to, to look at how do we keep our margins stable and grow the top line aggressively. I think that's going to be certainly something that we are going to look out for. My focus as we go forward is going to be to make sure that we grow the top line aggressively, even if we don't keep growing the margins at the rate that we've been growing them in the last 10 years. I would say 19 is our peak. We've gotten to that. That probably is something that we'll try to achieve, we'll aspire for. The fact is that regional competitors have been raising their heads, and the way they operate is on three vectors. So obviously, one is price. They sell at a cheaper price. Second, they make sure that they give the distributor a lot of margins, and they give the retailer a lot of margins. All three of those vectors, now in our case, we've got organized distributors. In their case, they don't have organized distributors, so they give the wholesale a lot of margin.
Britannia came out with the okay set of numbers, but it's just the commentary onwards from 2% lower, the stock reversed, and it's still maintaining about 1.5% gains out there. Sudeep, Yes Bank. I wanted to discuss Yes Bank with you. The stock has shot up 18% today, over and above yesterday, okay, almost 20% now, over and above yesterday's 10%. The only recent trigger appears to be commentary from HDFC Group that they are keen to buy more of Yes Bank in their funds. Do you see value in Yes Bank? You've been in financial services so long. Is the book all cleaned up ever since SBI took over?
Well, Ajay, definitely the book has been cleaned up quite a lot. Very difficult to say whether it's been fully cleaned up or not, but from the published information, it looks that a massive cleaning effort which was undertaken has yielded results. The performance has been improving, and amongst the smaller private sector banks, this is one definitely which seems attractive. On a couple of factors I would like to point out. One is, this news of HDFC Bank getting RBI approval to buy more stake in Yes Bank and, holding the stake. That was definitely a positive news. The other factor which distinguishes Yes Bank from many other smaller private banks is the technology. I think historically, Yes Bank has been very, very adept and advanced in terms of use of technology, providing technology-related services to customers and merchants, and that continues. In spite of the debacle on the asset quality and the management, changes, etc. The expertise and the advanced status as far as technology has been maintained, and I think that is one thing which will take Yes Bank forward in a much better fashion. So the management by the the SBI appointed person has been pretty good, and beyond that, the technology and other good parts of Yes Bank has been nurtured.
So that's about Yes Bank, but public sector entities have been in focus. A lot of those stocks are sitting at record high level. SBI today is of course 3 to 4% higher. You have LIC, which was sitting at record high level. Ditto could have been said for Coal India as well. The Prime Minister also addressed the issue and talked about the public sector entities and the turnaround there. Listen into what he had to say.
आदरणीय सभापति जी, आज अधिकतर पीएसयू रिकॉर्ड रिटर्न दे रहे हैं और इन्वेस्टर्स का भरोसा पीएसयू की तरफ बढ़ रहा है। जो छोटा सा भी शेयर बाजार जानते हैं, इनको समझ आता है, नहीं समझता है तो किसी को पूछो। आप सभापति जी देखिए, बीएसई पीएसयू इंडेक्स में बीते एक वर्ष के दौरान लगभग 2 गुनी उछाल हुई है। आदरणीय सभापति जी, 10 साल पहले, यानी 2014, 4 से 14 के बीच की बात करता हूं, पीएसयू का नेट प्रॉफिट करीब करीब 1.25 लाख करोड़ था और इस 10 वर्ष में पीएसयू का नेट प्रॉफिट 2.5 लाख करोड़ है। हमारे 10 वर्ष में पीएसयू की नेट वर्थ 9.5 लाख करोड़ से बढ़कर के 17 लाख करोड़ हो गई है।
Well, yes, and the market is clearly acknowledging that kind of big move that we have seen in the PSU stocks. And you can hear more commentary from the Prime Minister himself. He'll be joining us at the Global Business Summit, so stay tuned for that as well. We'll hear probably more on the PSUs as well as the entire focus that the government has in making India Viksit Bharat by 2047 and reaching that $7 trillion economy mark. Not just him, of course, there's a lineup of a whole host of guests from corporate India as well as the other ministers, so watch out for that important commentary. But back to the markets, because there's a lot of action there as well, especially in terms of individual names. Paytm is one stock which is logged at 10% circuit as well. Sudeep, your view on Paytm now, do you think the worst is now priced in and now it's time to probably look at adding and averaging out your portfolio?
Not really. I think this is an extremely risky strategy. You're trying to catch a falling knife, as we say in market parlance, and it's always avoidable. As far as the specific Paytm is concerned, the RBI direction has pretty much stopped the business of the bank, payments bank. There is a whole lot of uncertainty. There are some meetings happening, but how far, if at all remedial actions are approved by the regulator is a big question mark. As things stand today, the customer confidence, partner confidence, obviously for obvious reasons have eroded completely. There is a clamor amongst customers and partners to move out naturally, because by 29th February they have to stop the services. So I think it's a complete chaotic situation as far as Paytm is concerned. What value it will retain after 29th February, what kind of service it will be able to provide effectively, I think one needs to see. So it's very premature to get excited by some meetings happening in and around with regulators or otherwise. We have to wait and watch what concrete steps get taken and how they can bring back the customers and the partners.
Right, very chaotic right now in Paytm, so don't try and bottom fish there. But UCO Bank, IOB, EIH, Yes Bank, Trent, they're all up anywhere between 19 to 20%. They're pretty much locked at upper circuit. And Trent as well now 19% higher. Triveni Turbine, which had a solid run of 17% yesterday, is adding on another 17% today. Kunal, your view on Triveni Turbine as well as EIH, if you look at that, and your BTSC trades as well?
Well, yeah, I think many of these stocks are now showing very good pickup in terms of volumes also. I think what's attractive is not just the price movement, but the volumes backing this move even after such a kind of a steep price uptrend. That tells you that there should be more delivery based buying into these names. So, and I think most of the stocks like EIH Hotel, I think I saw the chart in the morning, the stock opened with a gap up of I think more than 4 to 5%, and it's still gained from those gap up levels. So still looks attractive. In terms of the BTST trades, two buy calls I would suggest. Bombay Dyeing is one of the stocks which is coming back towards the previous major highs around the 190 plus mark. So would suggest a buy with a target of 206, stop us at 184. And from the metal pack, JSW Steel is on the verge of a breakout of an inverted head and shoulder pattern about 835 plus mark. So would suggest a buy with a target of 880 and stop us at 825.
Right. Naresh, what about your BTST trades?
So that would be a buy on Badut Finance with a stop loss at 1410, target price of 1460, and second a buy on State Bank of India with a stop loss at 668 and a target price of 685.
Right. Okay, let's just begin winding up for the day. Sudeep, good to have you on the show as always. Kunal, Naresh, we'll let you go on that note as well. I think Anisha already flagged off the big star performers were clearly outside the index today. Trent, Delta Corp, all closing in on double-digit gains. I mean, there are a plethora of names actually which you could add to that list. There was Yes Bank as well. Canara Bank scaled up 5.25%. Idea sprung up 6%. Chambal Fertilizers held out 6%. And then, of course, there were the big boys like an SBI, Hindalco, Britannia, HDFC Life, Bajaj Finance as well saw a meaningful move today. Reliance, very volatile a session. You could see a reflection of that in the way the index moved and finally closed in up in the green. But that's pretty much it on this edition of Closing Trades. We'll catch you again with the market action tomorrow morning.